Hi, everyone. Thank you so much for joining into another episode of your favorite program, The Money Minutes. I have my co-host, Aman Sangha. He's going to be asking me questions, on a very important topic, which is personal disability and disability insurance today. I hope you enjoy this session. We've been bringing you very good topics in regards to corporate retained earning and its use. Today, it is again for professionals and also for business owners, a little different than retained earnings, but a very important topic, which is how to make sure that your income is insured just in case.
Thank you again, Seema. I'm always so excited to be hosting this with you. And you hit the nail right on the head by going to the root of this whole problem solving, as in you have to protect your income. So let me ask you, why is it important to protect that income? Like, is it something that you can put to numbers?
Yeah, basically, that's Aman, we're talking about something that is so important but not paid attention to. And quick example would be when I talk to my clients and I ask them, what is the most expensive asset that you own? And almost every time I get an answer, it's my house or it's my cottage or maybe a big piece of jewelry, diamonds, right? If I could show you something and then you tell me what the biggest asset for my clients, just to show you, Aman, what the earning power or the biggest asset looks like in numbers. So this is a chart that I borrowed from RBC, and where they say that your health is your wealth. Okay, let's say a professional who is earning $180,000 worth personal income at age 40, which is very, very reasonable for professionals to earn. Their biggest asset is $6.1 million earning power. So if they were to work between age 40 to 65, assuming they get a raise of 2.5%, this is what they would have earned by the age 65. So yeah, there is no argument that this is the biggest asset that we need to insure.
Right. So
right?
Yeah.
We can't buy a house which is worth $1 million without buying an insurance policy on it. We can't close the deal, right?
Right. Yeah. So I think that's a very good point. When we buy a house, we buy insurance on the house. Sometimes the mortgage would mandate that. So if we were to parallel the same thought to the earning power, are we saying that disability insurance is to earnings what house insurance is to mortgage?
Absolutely, and I think it's more important because mortgage you're paying down as you go, earning power is actually going up as you age, right?
Very true. That's a very nice way to put it, Seema. So it's a growing asset that you're trying to protect is what disability insurance provides you with.
That's right. And if we're insuring a car which is worth 50,000, if we're insuring a house which is worth $500,000 or $1 million, there is no reason why we should not be insuring an income which could be anywhere from $5 million to $12 million for someone, for a reasonable earner.
Yeah, I think that's a very powerful concept, Seema, and very nicely brought out. So I think the message is clear that our earning power is our biggest asset, and disability protection is a protection of that asset. So how does it play out? Do you have an example that you could share? Like, how does it work out? How much of your annual earning power would it cost to get disability insurance?
So one of the concept that I learned in early ages, and by the way, I don't preach anything that I don't use myself. I have been insured for disability insurance from day one. So here I was told that if you got a job offer for $100,000 annually, and if you were unable to work because of injury or illness, you got nothing.
Right.
Then the second job offer that I got was, what if we paid you only $98,000 per year?
Mhm.
But if something happens to you, we'll give you $65,000 tax-free. Which offer would you take? Which option would you go for?
Al says, Seema, are you kidding me? I'll go for option 2 anytime.
Anytime, right? And that's exactly what disability insurance is. You are paying money out of your pocket for premium, but you're ensuring that if anything goes wrong with your health, such as an injury or illness, you will be able to collect an income, a tax-free income for life, as long as you're not able to work, as long as your doctor says you're not able to work, and maintain your lifestyle.
Right.
So like you said, I mean, it's a no-brainer, right? Option 2 would be the one we choose.
Yeah. So I think just going back to my point, and it doesn't look like it's about 2% of the earning power that's buying you this peace of mind or protecting your earning power. That's the way I look at it.
And that's exactly how it should be looked at. If you're looking at disability, if you get disability insurance at the right age,
Yeah.
it shouldn't cost you more than 2% of your earnings.
All right. Okay.
So the key part is at the right age and when you're healthy.
Right. And so, so what's the impact? So let's say, I'm active, I'm at work, and suddenly I end up being unable to work because of illness or injury. Like, so how does it impact? Like, is it something that we can explore?
There is, Aman, that's a very good question. There is a myth out there that only an accident or an injury creates disability. I'm going to share some facts with you. Fact number 1 is, when you're healthy, you're earning an income, you're saving money, and you're spending that money. That's what we call lifestyle, right?
Right.
As soon as a disability happens, your income goes down, okay? Your savings disappear, and your expenses go up.
Right.
You may need to modify a lot of things in your home, and that could create more of an expense. Okay, so that's number 1, understanding the need for insurance. The second that I want to show is that there is only, if you look at the injury here, and we go and match it to our pie chart, it's only 14% of the claims that come due to an injury. 14%.
Oh, I didn't know that. That's startling. So where are the majority of the claims coming from?
So 86% of the claims are coming from illnesses. And
Wow.
like you mentioned earlier, Raman, we are living longer, but we are not living longer healthier.
Right.
We're living longer with a lot more conditions now than ever before, right?
Right.
So there are claims from mental disorder. We live in a stressful world. There are claims from cancer. There are claims from nervous system disorder. And of course, a lot of the other health issues that are listed here, and we have a detailed list, as you know, right?
Yeah.
I
So
think
that's very startling, Seema. Just to know that only a fraction of the claims originate from accidents, and the other are from illness.
that's right. Now, before because this is an educational video, we want to make sure no matter who you speak to, no matter who you talk to about your disability coverage, you should understand some of the things that you have to have included in your disability plan.
Okay.
And a list is created to ensure that you have this on your fingertips when you're having your meeting with the financial planner. So number 1, if you are a professional, make sure you have the policy that you own. If you own the policy, nothing can be changed by insurance company or by your association or a third party. So personally owned policies are way better than group or association.
So Seema, help me here. So a group insurance policy typically would be perceived to be at least more value for money. But what's the risk with a group insurance policy?
So the group insurance policy is something that is owned by the sponsor. So if your employer is sponsoring or your association is sponsoring, for example, in case of health professionals, their provincial associations offer disability coverage.
Right.
However, as the claims grow, the rate of the policy, or as the clients age in their life, the premium for the policy will grow based on that.
Okay. So are you saying like there could be negative surprises? Negative surprises?
They always are, right? We could have a letter coming from our association saying the rates for this category have increased now. Or it could even be as bad as we are not able to offer you disability insurance because of the loss ratio. So anything is possible, but when you own the policy personally, directly with the carrier, with the insurance company, they cannot do that.
So it's more peace of mind if you go personal versus if you go group.
Yes, yes. When you personally own, depending on the features you choose as well, like I could own a personal policy and I could choose an elevated premium or increasing premium. That's different.
Okay.
But I know my policy will never be canceled by a middle party who's not, who decides not to provide that. Or if I change my province, I don't have to worry about buying the disability coverage at that time.
Got it. Got it. So it provides you more focus, more visibility into what your future outflows are because they are fixed based on your personal insurability at the point of underwriting.
That's right. And personal policies are always they always pay tax-free benefits. Group insurance, you need to find out. Some do pay tax-free benefits and others do not, depending on what plan you're under, what your sponsor has chosen.
Got it. Okay. I see you have your own occupation there. I think that's a rider. Is that a rider?
Yeah, that's one of the things that you want to discuss with your financial planner when you're choosing benefits, to ensure how long can you be on disability before the company asks you, hey, I know you're disabled, but can you do another job if not your own job?
Got it.
That's what an own occupation rider provides to you. It provides you a guarantee that whatever it is through vocational training, your education, whatever you're trained to do, if you're not able to do that, your disability company won't force you to do something else.
I think if you're a professional, this will be of very prime importance, whether you're a lawyer, doctor, accountant,
Mm-hmm.
to have this rider on your policy.
Yes. And if you have this rider, even if you're earning an income from doing something else, it doesn't matter. They can't question you.
Great. Okay. Thank you for sharing that. Anything else? Oh.
So the next thing on the list is COLA, which is cost of living adjustments. So as we know, inflation is part of our life. If somebody goes on disability, and let's say at the time of disability, their benefit is $6,000 a month, and they stay on disability for 14 years, that 6,000 may lose the value of 6,000, and it may only be $4,000 worth in 14 years.
Got it.
So cost of living adjustment basically makes adjustment to your benefit based on consumer price indexing to kind of keep up with inflation.
Okay, I think that's a great point, especially if disability happens to be longer. So that'll be a good protection to think of.
Absolutely. And last but not least, when my young clients, they get into a program for disability, I make sure that they have guaranteed insurability benefit. What it does is, so for disability, you only qualify to buy what your income justifies, right? But let's say your income is low when you're getting into the disability program.
Right.
But you know that there is potential for your income to grow.
Right.
So having this rider or this benefit added to your policy, it would allow you to upgrade your benefits as your income goes up without proof of health.
Great. Okay.
right? And again, disability is like critical illness. It's tough to get approved for. When 10 people apply, maybe 6 people would get an offer back that's standard or without exclusions. So it is something that you want to think about if you're young when you're applying for the policy.
Right. So you're basically guaranteeing your health at underwriting. Then it's just a question of what your raises are.
Absolutely.
Got it. Got it.
So this was a quick snapshot, just giving a little advice on what to look out for when you're deciding on disability program for yourself.
Thank you again, Seema. Look forward to our next one.
And thank you, Aman. I always really appreciate you being here, co-hosting this program. I think there are lots of people that appreciate these tips that we're putting out. And some of them even come back and say, hey, does this really work this way? I love that. So thank you for co-hosting.
My pleasure, Seema. Thank you so much. You have a wonderful weekend.
You too.